All right, what we're covering in this video is we're going to touch on depreciation, what it is, what forms you're going to most commonly see it on, um, and then also how to just enter that into the program. So just to quickly touch on what depreciation is. Depreciation is a process of basically allocating the cost of an asset over its useful life. More easily explained in sort of a definition. When you buy a computer and it costs you $1,200, that computer is going to lose its utility, or more basically is only a value for X period of time. And at the end of that period, basically it's worth nothing, or it has no longer any value. So depreciation, a means of expensing your upfront, your $1,200 expense over the useful life of that asset. And so depreciation is commonly used in Schedule C, right? So you own your own business and you buy whatever XYZ business, and you buy a computer or a chair or a lawnmower or whatever sort of construction equipment. It's only going to be useful for X period of time. And at the end of that time, basically you've depreciated the asset, and it's technically worth nothing. On a Schedule E, page 1, for rental properties, a residential rental property depreciates. You get a depreciation expense. I think it's for what, I don't remember, it's 21 and a half years or 27 and a half years, but there's a term at which a residential rental property depreciates. Same thing for a Schedule F, for a farm. You're going to depreciate on a Schedule F. So what we're going to most commonly see depreciation on is on a Schedule C. So I'm going to jump back into a Schedule C that we've already created here. We did some basic expenses for a landscaping business. I'm going to click in there, and under expenses is where you're going to find this. So I'm going to click into expenses. Oops, clicked one too many times. And I'm going to go to line 6, or depreciation. When I click in there, it gives me the option for depreciation module. This is the recommended method for entering in depreciation, because it's going to take you just right through the steps. So I click on depreciation module and click OK. From here, I'm going to input a new asset. So I'm going to say new, and we're going to call this a lawn mower. And we put it in service at the beginning of the year, 01/01 of 12. And what did we spend on this? Well, it was a $3,500 lawnmower. We bought one of the big riding lawnmowers. And the next thing we need to select is our depreciation method. So different items have different depreciation methods and estimated useful life. So over-the-road tractors and computer software only has a 3-year usable life. Automotives, taxis, computers, and office machinery have a 5-year usable life. So you can scroll on down, and you're going to try to find what best fits what it is that you purchased. If you don't find something, you can, really adapt something else. But we have office furniture, fixtures, and agricultural equipment. And that kind of matches up the agricultural equipment piece. So I'm going to click OK here under 7-year. And then you have, is this asset eligible for bonus depreciation? And would you like to calculate bonus depreciation? Now that's a whole nother topic that we're not going to cover here, but we'll just say yes for our purposes. And we go on down and we look on line 11, and there's our federal depreciation amount. So really all that you need to do is enter in those basic components of when was the vehicle or the asset placed in service, what was the base or the cost of that asset, and then what is the depreciation method selected. So basically these top 4 items. There was a lawnmower. It was placed in service on 1/1 of 12. And this is our depreciation method. Now, if we don't like this depreciation method, we get in here and we go, I don't know. We want to expand it over more years or fewer years. You can change it to commonly what people use is straight line, but you have the option to go in here. And I was right. Residential rental property is 27.5 years. Yeah, me. So we can go down here and we could just do it a little simpler method, straight line or equal depreciation, and we'll put it in for 5 years. And it's going to give us a depreciation expense equal over the next 5 years for that asset. So now we've got 700 bucks. Click exit, exit, and right there, back on line 6 where we launched it, it gives us our depreciation. Now, if we had another asset, let's say it was a computer, we go to depreciation, depreciation module, okay, and we've got the lawnmower in there, but we need to add in a new asset. Click new, type in computer, 0101 of 12, it cost us $1,500, and then we click on depreciation, and we go to number 2, which has computers in it. We'll say that that's great, click OK, yes, and then we just click exit. And you're going to see, not to go through all the items again, but you're going to see here's our depreciation for the year for those 2 assets, and it carries right back over. So that's how you do it. It increases your expenditures in the business or your costs because it counts even though you bought it. Let's say we didn't buy it in this year, but we bought it in a previous year. That depreciation expense gets added in this year and adds to your total expenses. So I'm going to exit here and exit here. It's going to take me back to the 1040, and we're going to see that it changed our depreciation, and it also added the 4562, which is the depreciation IRS depreciation form, to our forms completed. That's all we wanted to touch on, what depreciation is, what it's commonly used for, how to navigate to it, and hope you learned a lot. Thanks so much.